What's up, fellow scavengers? Hope everybody is having a good day. Today we're going to talk a little bit about strategy and what Scavenger Bot is aiming to do with every single trade that it makes every day. We're going to give you some more info on just why we call this a market making bot and kind of more about our original strategy and how it works. So there's been a lot of questions in the Discord about, how does this work and how does the drawdown work? What is this? Like, it's just buying in this position, and I figured I'll make it a video and try to give you guys like the basics on how this strategy is working, where we came up with it, stuff like that. So there's two things that make this strategy work and why it's been so successful. So the first thing is like we said, we always suggest running two accounts because it allows you to split the risk, and we're going to show that first. So if you can see here, this is a position, one of the bots is going long, all right? So I want you to imagine that your entry point is here, all right? So this right here is a long straddle. This is what we call this kind of position. Now, the point of this is to limit risk. We actually run this as a synthetic straddle. So when you run in both directions, you have a position going long, and then you would have a position right around the same point, and you'd be going short, all right? So if you look at where this line is here, we'll click on it and say, this is where our other position would be sitting, all right? Somewhere in here, okay? So right now we're straddling the average entry point right here on both sides because we have a long and then a short on a different account, right? Now the point is, we're gonna be doing two things now that are advantageous. One, we have a position and we're building that. We don't care what direction this goes. All we need is the underlying contract to move significantly in one direction or another. And when that happens, this price will go out, it'll close in profit. And yes, it'll close in profit, and then that's that. You know what I mean? Then the position's closed, you make a profit. That's what this is all about. Now, the second thing is if you go in the account and you go into your order history, trade history, sorry, you're going to see this. This is the big thing here. Every time we buy or sell, we're getting paid. So these exchanges we're providing liquidity to by putting our orders in the books, and they're going to pay us. So instead of us paying a fee to BitMEX, they pay us, or you as a trader, 0.0225. Not us as Scavenger Bot. This is you as a user. So every time you place a trade, they're gonna give you 0.00 or 0.0225%, and you can see the amount in satoshis here you get for each time you place a trade. So you're getting paid every time you place an order and every time you place a sell. That's great because usually it works the opposite way. So we have you getting paid on orders, you straddle into position, so you're market neutral. That's the key thing about the straddle, all right? This is a synthetic straddle, and you're going to remain market neutral, all right? So you're in a position where you don't care where it goes. Now, if we get a big shift, say like this, what happens? We dollar cost average, and we bring this, the algorithm that we use in the back is the important part, is we have an algorithm that predicts how much time decay. All right, now that's very important. Now there's other meanings for that, but we're just going to call it time decay or drawdown. Now that's how far you can hold this position based off of your risk and your balance before you would ultimately become liquidated. So it's pretty simple. Like there's really not that much to it. It's not that complicated. So basically we're just trying to hang in the game and buy smart positions. Now there's indicators that we use. So after you to sell, so say this comes down and sells, there's an indicator we use to make sure you're not getting right back in at the tip. You're gonna wait for it to equalize and like come to some or like what we've seen on big positions here. You wanna be buying in this point of normalcy, not on these huge candles. If you were to buy through this entire candle, that wouldn't make much sense because think of all this. So when this happened last night, our bot wasn't buying through here because this happened in the matter of 1 5-minute candle. One, BitMEX, you can't keep up with the API. Two, why would you want to buy through this entire order book? That makes no sense. So that means you'd have orders sitting all the way up through here and you would buy this entire order book. But this is a void. Now what Scavenger Bot would do is it's going to wait. It's going to come through here and then you're going to start trying to get orders filled when the move slows down. All right. So you're getting a better average entry price. So I hope that makes sense. There was something else I wanted to cover about this, but so we got the commissions, we got the synthetic straddle. It's limiting your risk because you're hedging your balance basically in two separate accounts, which is also important. And we're waiting for the underlying contracts to move into profit. So if you guys have more questions, comment on the video below and we'll try to answer more. But really, this is basic. We have future strategies coming out in the future that we've already basically worked out. But, we're trying to perfect everything that we're doing here for you guys. And, yeah, hope this helps. Leave comments below if you have questions, and we'll see you in the next video. Peace.